How does Iowa tax its retirees? Well, that's what we're going to find out here today on the Heritage Wealth Planning YouTube channel. So stay tuned, and we're going to cut to the chase of how the great state of Iowa taxes retirees. So let's dive right in, my friends. As is our want, we're going to start with a Kiplinger, Kiplinger.com, and we looked at Illinois last time. We're going to look at Iowa. And again, the blue is not tax-friendly. The green is tax-friendly, and the white is smack dab in the middle. And again, look at Iowa, a light blue, which means it's not tax-friendly. So let's find out why that is. Isn't that interesting? Iowa, not tax-friendly. What are you doing over there, folks? We got to change that for sure. So let's see what we have here to say. We got to hit that link right there. The bottom line, the Hawkeye State talk at a top income tax rate is a steep 8.9%. But retirees can exclude up to $6,000 of retirement plan distributions if single and $12,000 if married. So that's good from state income taxes. Social Security benefits are free of state income tax as well. State tax levy, sales tax levy is 6%, and localities can add as much as 1%, and the average combined rate is about 6.8 according to the Tax Foundation. Low income tax range up to $1,500. I don't have my calculator. No, I don't. But remember, as we talked about every other episode, but if this is you, because this is the only episode you're seeing, taxable income is not the same as gross income. So taxable income is if you're married filing jointly and you're over the age of 65, you have $26,600 of standard deductions, which means that you can have $7,554 before you're getting hit with Iowa tax of 0.3%. Does that make sense? So remember, basically anything above below $26,000 is free and clear of income tax, of taxable income. So anything above $26,000, or actually I should say $27,000, would be subject to a low 0.36% in the state of Iowa. Taxable income of over 8.98% of a taxable income over, let's just say 70,000 will get you up to 8.98%. And I don't see that it differentiates between a single or tax or a married filing jointly. So if that's just per tax file, so I'm married to my wife, Charlotte, we file one tax return. If that's just one tax return and we have taxable income over 70,000, we're going to pay 8.98%. Taxes on the amount above 70,000. If I die, my wife is left, and she has income of 70,000, she'll pay the same thing. So that is definitely a marriage penalty there for sure, because that's not a doubling per individual. It looks like it's just per tax return. I know that can be confusing as all get out, but just remember, per tax return, we have two people filing one tax return. All right, so you get two standard deductions per tax return. Here, you're just getting essentially one tax return over 70,000, and you're paying 8.98% of taxes. That's pretty significant there. All right. Iowa also allows residents to deduct federal income tax from the state taxable income. All right, that's a little bit of a help. Individual tax returns, effective tax rate 5.3 to individuals, 7.6 to joint. Again, joints getting paid more because it looks to me everything's just going on that one tax return, and thus the marriage penalty. That's for sure. Exemptions. Taxpayers 55 or older or disabled or surviving spouse can exclude up to $6,000 if single, $12,000 if married, of taxable income from a pension, annuity, IRA, self-employed retirement plan, deferred compensation, and other retirement plan benefits. Out-of-state government pensions also qualify for exemptions. All right, so there you go. You got up to $12,000 of your required minimum distributions, for instance, of an IRA distribution, a 401k distribution, whatnot. Public pensions. Okay, so basically, military benefits are exempt. I'm not sure if that means exempt from exemptions or exempt from taxes. I'm assuming that means exempt from taxes, actually. So basically, you get $12,000 married of your IRA distributions, qualified distributions, pension distributions. Does not say annuities, and I don't think it would, because annuities are not considered it does say annuity. There you go. Okay, so annuity distributions as well. So you're not subject to taxes there. And then you have your Social Security is free of tax as well, which was right there as well. So no tax on Social Security up to $12,000 married filing jointly on your IRA distribution. So that's not too shabby. The median home value in Iowa is $133, and the property tax on that median home value is about $2,000. What's that, about 1.3% roughly as a property tax rate? So that's not low. That's not extraordinarily high, but certainly going to be on the higher end of the U.S. The 50 U.S. states. Property tax credit is available to residents who meet annual low household income requirements, who are also age 65 and older, but your household income has to be less than $22,300. Now, again, household income, is that considered gross or is that considered taxable? I do not know. And that could be a significant difference, because gross, it would be, if this is taxable income, that means your gross income could be $22,000 plus the $26,000, which would put you almost about $50,000. But if it's just your gross income, you're not going to get much of a credit on your property exemption. That's for sure. Vehicles are subject to one-time registration fee of 5% of the sales price. So one time, that's it. That's not too shabby. That's pretty good. I like that. That we don't have to keep paying each and every year like some states do. And that can easily be overlooked, which is unfortunate, because that can be a significant fee to you. No estate tax, but there is an inheritance tax of 0 to 15%, depending on the amount of the inheritance and the relationship of the recipient to the decedent. No taxes due on property left to surviving spouse, stepchildren, lineal descendants, or lineal ascendants. Okay, all right, good. So basically what that's saying is, if you leave money going up or downstream, upstream to your parents or grandparents, or downstream to your children or grandkids, there is no inheritance tax due. I like that quite a bit. No tax due if the estate's net value is less than $25,000. Wow. All right. So now, what if you're leaving to a nephew? All right. Well, that's not lineal. That's to the right or to the left. So your lineal is going shoot or up. A nephew's over here. You're here, and the nephew's going that way. That means it will be subject to inheritance tax up to 15%, as long as the estate's net value is more than $25,000. So we're going to have to talk on that, because we'll do another tutorial on the various states' inheritance and estate tax. But let's just say, Mrs. Smith, you're a sole survivor. You didn't have any children. Your husband's dead, sole survivor. You're a surviving spouse. Your husband's dead, and you have no children, and you want to leave it to your nephews and nieces. You're going to have an inheritance tax for sure. And we'll have to dive into that in another episode. But that's something we need to look at for sure. I didn't see a gift tax here. So I'm presuming there is no gift tax. And if there is no gift tax, you probably want to start gifting that money out of your estate now, as a when you die. So it's subject to the inheritance tax. We'll talk about that in further detail in other episodes for sure. We missed Indiana. We got to go back to Indiana next time. So Iowa. We skipped Indiana. We're going right to Iowa. Sorry about that, folks. In the Hoosier State, we'll get you next. Each state's tax code. Okay, so how does Iowa rank? Iowa ranks in terms of their state and local tax burden 31% in the 31st. So again, we want to be higher. So this is in the top half of the most beneficial to you as a taxpayer. Tax Freedom Day is April 14th. So just to reiterate, we do not want to be 1. We want to be 50. Alaska's 50, and they're the best in terms of the least tax burdensome. Iowa is in the top half, so one of the least tax burdensome, if you can believe that, even though it's 9.2%, which is just shows you how much the states can get you for sure. Sales taxes. Again, if you just look at this, you say, oh my goodness, Iowa's bad. And they're in the top 20. We don't want to be in the top 20. But when you factor in the average state and locality sales tax at 6.8, not too shabby, and it's in the top half in terms of the favorability for sure. The top half of how much they tax on cigarettes, and the top half of how much they tax for gasoline tax. So essentially, they're half across the board for income and sales taxes. Let's see, property taxes, 1.44% in the top 15, and again, their per capita collection is pretty high relative to the rest of the country. So Iowa's not tax friendly. No getting around that. I mean, they're in the top 20 where we don't want to be, and when it comes to property taxes, smack dab in the middle when it comes to state sale and local sales tax, cigarette tax and gasoline tax, and then income taxes are right there and basically about the top, roughly the top half as well. So Iowa, yikes. I'm surprised by that, actually. But all right, so let's see now. We go to smart state of Iowa. We're going to say we have $25,000 of Social Security, $25,000 of retirement income, and see where that leads us in terms of married filing jointly born in 1953. And again, we're just saying that because that would put us at well into our 60s. And do we have government pensions here? Yes, we want to get rid of that. All right, so we got $50,000 of income and gross income in the state of Iowa. Other than that $50,000, we'll pay $148 in income tax. So that's not too shabby. Let's do this $50,000 just to get a gauge, and we're going to hit crack out there. And it jumps up. So we doubled our retirement income, and we 10 times our not our total retirement income from our IRA, and we increased our taxes by about 9 to 10%, not 9 or 10%, 10 times, 9 times to 10 times, because we start having more and more income that Iowa taxes at the pretty significant tax rate of 8.98. So if you're below $60,000 or so, I think you're doing pretty good in Iowa. Once you start getting above $60,000, they start getting it for sure. So that's interesting. I'm just curious. Let's go up to $75,000. So if you have $75,000, yeah, there you go. So I mean, still though, you got $100,000 of gross income. You're paying 2.2% to the state of Iowa. I'm not going to argue that. That's not going to ruin you for sure. But at the end of the day, some states are more favorable from an income tax perspective. Illinois, shockingly. So Iowa is not great. No other way around that. You're going to pay property tax. The nice thing about the property tax, let's just go back to the tax foundation. Median house, or not, we want to go back to Kiplinger's. Excuse me, my friends. We go back to property tax. The median house in Iowa is only $131,000. If I did not, right here, yeah, $133,000. Again, remember, median is 50% above, 50% below. So that's not too shabby. I mean, $2,000 on a $133,000 home, you're paying $2,000 on $100,000 income. That at the end of the day, you are going to pay a middle of the road state tax or sales tax. That's it might be a pain point for you, but certainly it's doable for sure. So nothing inherently wrong with that. Just there are states that are much, much more tax friendly for sure. So there you go. Hope you find this helpful for you soon to be Iowan retirees. Thumbs up are always helpful for sure. Don't forget to comment down below. What's your research telling you on your favorite states to retire? Give me a subscribe to the podcast by clicking right there. And then, of course, always hit that little notification bell to be notified of future content. Always go to heritagewealthplanning.com. The blog, the podcast, and the videos all can be found at Heritage Wealth Planning. And, of course, don't forget to subscribe as well. We'll see you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.